Welcome back to the channel, guys. This is Jason, Certified Financial Planner, host of Fighting Words Financial. Today we're going to talk about Fastenal. Great company, boring business. Why am I talking about this? Because the stock of this company is anything but boring. Hey folks, before we get started, quick disclaimer, this is the internet, you know the drill. This is not financial advice aimed at any individual. This is not a recommendation to buy, sell, or hold any security. Do your own research, make your own decisions. Thank you very much. All right, who is Fastenal and what do long-term investors know about this company that's made it such a great stock to own since its inception? Fastenal, which trades under the symbol FAST, is the kind of company that Warren Buffett should love. One that boasts tech company-like returns but has an utterly unexciting business model that thrives in really good times and bad times. The idea for Fastenal was actually conceived by the founder, Bob Kierlin, when he was only 11 years old. Bob used to assist his father in the family auto shop in Winona, Wisconsin, and he noted that customers typically drove from store to store looking for fasteners, nuts, and bolts that they needed for particular jobs. If a hardware store didn't have the right nut or bolt, the owner would often send the customer over to Kierlin's store or to another place. In many instances, Bob noted that the fastener simply couldn't be found locally and the buyer would have to place a special order and wait. So even at 11 years old, he thought there could be a better way, saying, "I wonder if you could put a store together with all the parts." Bob Kiernan ended up founding Fastenal with a few partners. And when I say partners, it was really his friends from high school. Now, he did this in his early 30s, and after a few rocky years in the beginning where the company lost money and the partners were continually putting in $1,000 checks, Fastenal settled on a new strategy, deciding to focus on the commercial market. Now, their stores are very much open to the public today, but their service model is really tuned towards serving its commercial clientele as a matter of efficiency. It turned out that price was much less a factor than timeliness for that commercial market sector. Contractors and companies often lose money searching or waiting for a particular part. Kierlin and his partners discovered that there was a great need for a service that could quickly provide the fastener or part, even if it was at a premium that a commercial buyer needed. That premium, of course, translated to much higher store margins. That change turned out to be exactly what their stores needed to become profitable. And Kierlin left his job at IBM in 1973 to run Fastenal full-time. So what exactly does Fastenal do? What they sell isn't really all that special. Fastenal Company has traditionally been a wholesaler and retailer of industrial and construction materials like screws, bolts, and fasteners in the US markets and overseas. In the last 15 years, however, they branched out into new product lines. Now they have power tools, cutting tools, hydraulics, pneumatic products, material handling products, janitorial supplies, electrical supplies, welding supplies, and more importantly nowadays, safety supplies. And that's really becoming a large part of their company revenues. Now, there's something that long-term investors have long recognized about this company. It's really hard to put in words. There's just something to be said about the undying demand of Fastenal's ever-expanding client base, especially internationally. They have this new line of, and they're seeing tremendous growth in this new line of automated industrial vending machines. That's really kind of truly revolutionary. And I'll be honest, I kind of dismissed it at first when I heard about it, but they've got more than 100,000 of these automated industrial vending machines now in service nationwide, and they look like they're growing at about 4.5% to 5% every quarter. They're also looking at growth in new and existing on-site locations, both domestically and especially internationally. Long-term investors have long taken notice of the company's strong performance since they went public in 1987. Fastenal in that time period has split 6 times and has grown more than 22,000%. The company has experienced several periods of explosive growth, resulting in a price history that looks similar to some famous and familiar tech stock names. The stock still has plenty of room to grow as they have just begun to expand internationally. Fastenal isn't just a growth stock either. Fastenal started paying a dividend in 1991. Current dividend yield usually isn't that high compared to its peers. It's around the industry average of 2.5%. But the company is known for its consistent dividend, only cutting their dividend once in the entire history that I could find. Fastenal also has a very strong track record of dividend growth. Over the last 10 years, ending June 2020, Fastenal has grown their dividend by an average of 17.2% per year. So what is the secret of Fastenal's success? What keeps them growing? Well, they have multiple competitive advantages, and those advantages really grew out of challenges during their history. These competitive advantages form the so-called moat that Warren Buffett often references when he's speaking about a particular company. One advantage is scale, the cost savings associated with larger corporate size. Fastenal has 2,200 stores located just in North America and Europe. Fastenal also has a subsidiary located in Asia that has locations in China, Singapore, and Malaysia with plans to expand operations. Another advantage is scope. There can be tremendous cost savings to the customer associated with offering many different products for sale from a single company rather than having to go to several different companies. Fastenal sells hundreds of thousands of MRO, construction, and OEM products that extend to more than 20 different product lines. A third advantage is customization. There are benefits associated with offering customer-tailored solutions. Fastenal's manufacturing facilities that they own can tailor products to different customer needs. A fourth advantage is bundling, the packaging of different products and characteristics to create unique customer offerings. Fastenal's extended store network and highly trained personnel allows the company to bundle products with services to meet needs for clients locally. A fifth big competitive advantage is order aggregation. There are huge benefits associated with pulling a large number of orders together. Fastenal helps its customers cut their transaction costs by offering them a one-stop solution for all of their hardware needs. But perhaps the biggest of Fastenal's multiple competitive advantages is the integration of its supply chain activities. These advantages create a formidable barrier to entry for any new company that wants to try and compete. The company owns its own manufacturing facilities, transportation fleet, distribution centers, inventory supply system, and retailing and sales service facilities. This vertical integration gives Fastenal the ability to redesign and change the scope of their operations to meet the demands of a changing world, something that they've done several times in the company's history. Fastenal's success in 2020 really confirms that companies with multiple competitive advantages like this can survive and thrive in good times and bad. Just look at recent financial reporting for Fastenal. Second quarter 2020 financials really reflect a company that barely noticed a pandemic and all of the resulting shutdowns. Now, in large part, this is due to the fact that the sales of their safety equipment line surged while sales of their fasteners and other lines declined. Quarterly sales of $1.5 billion actually represents a 10.3% year-over-year growth compared to quarter two of 2019. Quarterly earnings growth increased by 16.8% over that same period. Gross profits of $671 million represent a 9.5% year-over-year growth when compared to second quarter of 2019. So as you can see, folks, from this short video, that performance and financials look pretty solid for Fastenal. Price history and past dividend growth look more than solid. If you haven't looked at Fastenal before, I think this company is worth a second or third look if you haven't included in your portfolio. Particularly if you have a portfolio that is heavily tech-based and you're looking to diversify your holdings. Or you're looking to build a dividend portfolio for the future. Remember, building out your dividend portfolio should not be based on the current yield of whatever stock you're buying, but on the likelihood for future dividend growth. And it is a fact that Fastenal has had plenty of dividend growth over its paying history. All right, folks, once again, this is just my take on one particular company stock, Fastenal. I encourage you guys to do your own research, make your own decisions, and come to your own conclusions. I'll see you next time.